If you had invested rupees 10 lakhs in 2003 in TTK, it would have been worth 190 crores by 2023. This is the beauty of stock market. If one wants to earn money from stock market, then one has to understand how people earn money in the stock market earlier. Investing in stock market doesn't require high IQ. It only needs common sense, very basic math knowledge to read and understand the annual reports, but very high emotional control and ability to hold the stock for a long period of time. This is very important. TTK Prestige, everyone knows that they are into pressure cooker and cooking appliance. Hi, welcome to Money School. I am Srinivas. Now looking at the P&L statement, every investment should have a strong story which will give you high conviction to buy the stock. In 2003, company sales was 146 crores, but the company market cap varied between 7 crores to 24 crores. That is, if someone wants to buy the company, it was available at zero point zero 0.05 to zero point 0.17 times the sales. All of us knew that almost every woman will buy pressure cooker, gas stove, and mixer grinder required in kitchen. TTK was into manufacturing these appliances which are required in every home. In this case, story was strong, simple and concrete. Now look at the P&L statement. Company has been consistently growing except in 2020, maybe because of COVID effect. For the past 3 years, it has grown at 10% CAGR. Its OPM, that is operating profit margin, varies between 12 to 15%, which is good with so many competitors. For the last 3 years, company has given negative returns of minus 2% CAGR. Now looking at the balance sheet, equity has not been diluted, reserves are good, debt is under control, promoters have not sold any equity and have good cash reserves for the future needs. Now looking at cash flow statement, company has been able to generate positive cash flows consistently, which is a good sign. They have been consistently generating cash flows from 2006 and they are able to generate 200 crores from 2020. Now ratio analysis. ROCE, that is return on capital, has been consistently 20%, which means they have not raised any fresh debt and cash is well managed. Return on equity, ROE, is also 16%, which is good. Coming to shareholding pattern, promoters have not sold any equity and their share remains constant at 70.4%, which means they have skin in the game. Now, coming to the last part, how much the returns have been given from 2003 to 2023. While the company sales grew from 146 crores to 2700 crores, which is 19 times, the market cap grew from 7 crores to 14,539 crores, which is about 1900 times. That is the beauty of the stock market. Rupees 10 lakh invested in 2003 would have given you 190 crores plus dividends extra by just doing nothing. That is, invest right and sit tight. Brokers make money from activity and you make money from inactivity. Thank you.